a steadfast
Sure.
bull? What about this? Must be driving you crazy, this underperformance.
Well, there's no question that Amazon is in the penalty box. Even we put it in the penalty box where we trimmed our position last quarter and looking to add back once we get better clarity on where estimates will ultimately land. The company made missteps. I mean, we're not seeing the margin as soon as we thought we would. And at the same time, Jassy says it's his number one priority: cost cuts and right-sizing the margin structure of the business. But it did get hit with a double whammy with Powell and bringing consumer discretionary fears on that side of the equation. But I think for the near term, there's myopic focus on the AWS segment, and we do think that that's just the cyclical nature of the beast, given the scale that it has. So I don't think really it's a share shift necessarily, but I think that estimates will trough here in the near term and should help accrue benefits to the stock over the coming months. But it is in the penalty box, but that doesn't change the long-term secular opportunity within Amazon for sure.
Barton, your hesitation has been vindicated. Why do you think it's taking the market so long to come around to the idea that the stock's a little bit broken? I mean, the analyst community remains extremely positive.
Well, look, I think that Amazon's a great company, right? I mean, I have a neutral rating, $106 price target. But I think expectations are really high. And one of the things where expectations probably need to come down is web services. And, that gets to the comment that was just made that this is just a cyclical slowdown, the slowdown to mid-teens growth in the first quarter. We'll see. I mean, I think that you're seeing some of the biggest customers of web services, the streamers, the internet companies, the Snaps, the Netflixes, mature. They're not growing. Snap is talking about margin opportunities from its web contracts, which are both Google and Amazon. And, I think we're seeing a lot of that. And I think that the web services companies are, investing in big companies like the exchanges to get deals.
Right.
And we're seeing competition from Google that's funding big losses that could be disruptive over time to the margin structure of this industry. Look, no doubt more computing is going to the cloud, but does it grow at a 30% pace when it's very, very early days? Or does it slow down to kind of mid-teens that what we're seeing right now is the new normal? And I submit that if the macro remains challenged, that could be the new normal, and that's a headwind for Amazon stock.
And you're both talking about cloud, James, but even as sentiment is reaching a low on the stock, I'm getting stuff at my door in like 3 hours, 2 hours these days. Are consumers going to wake up and go, oh, wait, I didn't realize it actually had this potential?
Yeah, I mean, look, the service is improving, and the logistical network and the strength in that, just as you pointed out, is a proven point. But I really think on the AWS side, it doesn't have to continue to grow at the 30% plus range. As long as it can grow 15, 20% at that 30% margin, there's huge opportunity to be had. I mean, if you slap a 10 times multiple on that AWS basis on a trailing basis, that's $800 billion in value relative to a market cap of $980 billion. So what's the retail business worth today?
Right.
Arguably more than $180 billion. And keep in mind, this was a company marching back toward 20% growth last year. In the third quarter of 2022, they posted 15% growth. Obviously, Powell threw a wrench in things, but I think you really got to zoom out on this one at 1.7 times sales. The risk reward is certainly there, but you got to stomach a little bit of volatility.
I love the analysis. I just have 3 seconds left here, so I'm going to say goodbye. James Chuckmuck, Barton Crockett, to be continued.